Hello traders, welcome back to my channel. In this video we are going to be doing a top-down analysis. So it's a strategy we are going to be learning, and we are probably going to be making a weekly forecast on gold and some currency pairs. So we have our current forecast for some currency pairs, which can also help you in your decision making, facilitate the decision making in trading the forex market for the coming week. All right, and then this is a strategy that you could be able to also use in other markets, and then you can be able to grow your account. So make sure that you watch the video to the end. Okay traders, welcome to my channel.
I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
All right, so let's begin with gold. Now we are doing a top-down analysis. Gold actually has been in an uptrend for a while now. All right, and we have been able to catch very good buy moves. You can see all of these zones that I mark out. These are the zones I caught my trades, and this is the next zone that I'm going to catch another trade. I've been able to catch a lot of pips this these past weeks on gold, right? So how was I able to do my analysis? What you do is, right, we go to a bigger time frame. All right, go to a bigger time frame, the H4, the daily, but we already have a lot of information from the H4 time frame, right? So if you start from the daily time frame, what do you see? We see price broke out from a range. Right, the reason why the trending market is so nice, very good in a smaller time frame, is because price actually broke out of this zone here, right? And in a bigger time frame, we saw the reaction after a break is always massive. So when we go to the bigger time frame, we already know at the back of our mind that we are marking out our zones and then knowing what to expect in smaller time frames, right? So if you look at it very well, you see it was more like a pattern that got broken. Okay, we had something like a chart pattern that got broken in the bigger time frame. This is based on the bigger time frame. So this was like a flag pattern that got broken, and the rows are the same whatever the time frame it applies. When a flag pattern gets broken, it's a continuation pattern. So we had these waves of impulsive and pullback, impulsive pullback, impulsive pullback, pullback, and then the next impulsive move. So if you had this kind of candlestick breakout from a bigger time frame, you go to a smaller time frame, what you should expect is to see very good trending market, right? Because one candlestick like this in the daily time frame will be a complete trend in a smaller market or in a smaller time frame. So we already know that at the back of our mind, right? That is to help us. We are not entering based on this time frame, so we are only taking information that will help us in smaller time frame, so that we should avoid buying when price is at a major support or a major resistance in the bigger time frame, which we will end up losing. So we make sure that we have that information and pay that, take that into consideration. Now this is the H4. Look at the H4. It's already clear we have a very strong uptrending market. This is very good, guys, and we are going to make a lot of more profits this coming weeks, right? So this is very nice because we don't have a major key resistance level at this zone. So when I zoom out, I'm just trying to identify if there's a major resistance that can stop price, but we see that price is probably going to move up for a while, right? This is also the zone that got broken. This is also kind of a major resistance that was broken after rejecting once, twice. So we have to be looking for a lot of buy trades. So now in the H4 time frame, we already see the information is still clear. We have a very strong uptrending market, right? So this is one of the typical trending markets that are really nice to trade, right? So basically we have this price goes and pulls back, but because it's too strong, we can go further to a smaller time frame, and then we are going to be looking for patterns, right? You can look for your trend line entries, you can look for your supply and demand, all of that. So I usually enter also based on the smart money concepts. I wait for price to pull back. Now you see I drop further to smaller time frame because I was majorly scalping, right? In smaller time frame, I look at the situation where price creates highs, right? When price creates a high, I mark, and then I wait for price to create a key support zone. Price get rejected once, twice, right? I wait for price to clear liquidity. I wait for the banks, because in this situation what happened is the banks actually identify that this is the support zone in which price has rejected once and two times. They know that many people are going to be selling or are going to be buying. So what they do, they will usually place a lot of buy trades. Okay, they'll usually execute huge order trades here, which are like sell trades, move price and hit all stop losses, and then close the trades, place other buy trades that are huger, it will move price and to close above this zone here. All right, because they have the intention of clearing liquidity. So most time I'll enter and then I'll take my profit one, my target two, and by the time price is reversing, I've already locked the next profit. So I wait for other further scenarios like that I identify, and then like this I enter. This is the same scenario, and then you see I got a very good move, price move up. You see another scenario here, we have equal lows that have been created. Price, the banks do their manipulation, the smart money, and then we enter, we have our first target there, we lock the next trade, and then you see it continues like that. So we are actually waiting to be entering based on impulsive move or when price pulls back, right? So when price creates an impulsive move, we want to wait for price to pull back. Either it clears liquidity or it comes and reject in a measured supply zone or a major demand zone. We are looking for price to create impulsive move, and then we wait for price to come back, because after that we have the next move. So like what happened here, we had a news release as well. It led to this candlestick that created this impulsive move, price pull back, and then we have the next impulsive move and price pull back. So what do you expect? We expect price to move up, right? Because here we already have this to be what the demand zone that price has already created, and then in another hand we have kind of liquidity clear, because this is the last zone here. Many people who entered, because this is what we call inducement. This candlestick has induced many people to enter as price hit this demand zone or this other block here with this rejection candle. So many people entered, got stopped. So we have liquidity that has been cleared below that zone there. So because liquidity have been cleared here, right, this is liquidity that has been cleared, there is a lot of momentum for price to move up. And the reason why we usually consider liquidity is because that is what usually cause price to move. You get the point? Because when the banks manipulate or move price like that, their aim is to hit as many stop losses as possible so that they can be able to execute their own trades. Right now the logic is simple. They execute their sell trades, when they know everyone will be buying. These sell trades move according to the volume of trades that are available, or this this volume of trade, they are very huge, which actually cause price to move. You remember that market move according to this volume. All right, if they are selling, even if price is in whatever zone, price will go down. If they are buying, price will go up. So they will actually move price to clear liquidity, and when they clear now, they will have the possibility of executing their own huge trades, which are also their own buy trades. And as a result of that, you usually see price move up very high, right? So that's basically a possibility which usually happen many times, and I've showed you some examples. And we also consider this to be a demand zone. So when this clears and then we have this other block zone, there's a high probability. So remember, the channel is to teach you strategies, right? And you can use it in any market. And remember, like I always say, it's not an investment advice. It's just a numbers game. Trading is just a probability, and you should not have take trading decisions if you do not want to lose. So you don't invest what you don't want to lose, because me, I deal in probabilities. What works for me is that I take trades and then lose some, win some, and I use high risk to reward ratio, and at the end of the day I'm profitable. That's why I teach people how to use my method if they can afford to lose. You get the point? So it's basically not an investment advice and all of that. There's a possibility of a high here for price to move up, right? So let's just quickly look at euro US dollar. In euro US dollar. And before we continue, guys, if you want to trade with me, right, if you want to trade me, you want to receive signals from me, right, I'm going to drop a link of my favorite broker, right? I usually charge for the VIP group where I usually give signals, very high probability signals, but this time I just make it free. But all you need to do is you sign up using my broker link, xnext broker, which I'm going to drop in this video's description below. Once you sign up to that broker, you just need to fund it. Once you fund it, just send a screenshot to me through the Telegram link that I'm also going to drop in the same video's description below, and then you are added free to get our signals, right? So basically that's it. Now looking at euro US dollar, we had also an uptrending market, and we had price breakthrough a major zone. Now let's go to the daily. If you look at the daily here, you can see that I may have marked out my zones, right? So these are the zones that I may have marked out in the daily time frame. Basically we have price start creating higher highs and higher lows, higher highs and higher lows. And in the daily time frame, we had impulsive and pullback move, right? This is because basically we had a downtrending market, but we had a break of structure, change of structure, and price actually started moving up, right? So now basically what we know is price create an impulsive move, pullback, create the next impulsive move. And when it creates the next impulsive move, it got rejected in a support zone, in a resistance zone. So there's a possibility to come back and retest this zone here and then go further. But that would be based on the bigger time frame, because here we had a key zone here that have been violated or that have been broken. You see, you get the point. So you have price got rejected here before it got broken. That is the information that we have on the bigger time frame. So if you drop further to the H4 time frame, you can see price is doing just that, right? Impulsive and pullback. We had a news release, we have price leave behind a major demand zone here. You can see this long body candlestick, so there's a possibility that price can come back to retest this, right? But I'll be a little bit skeptical about this because we have a resistance zone above here, but there is a probability as well that price can pull back to test this other block here, then to hit higher. All right, and then if you go further to the H1 time frame, you can see we have intraday entry setups, right? We have this zone here, which is one of the key zones which we are going to be looking for, and then we have another zone here which price has created, got rejected. So we had a news release, but price was not very strong, and price actually rejected and came here. So there's still a possibility that price can go up here, but we have a higher probability of this zone here. But if you look at it based on the 15 minutes time frame, you can see this is actually a demand zone, right? This is a demand zone here. You can see this consolidation that led to this strong move, and we have an imbalance. The body of this candle price has come back to test, so there's a possibility of price moving up, but this is a low probability entry because we have a major zone that price can be tapped into in the bigger time frame before heading higher, right? But I'll be a little bit skeptical. Like I said, I will not use my I'll not risk too high if I have to enter here because of the zone above. Okay, so you need to have the ability to distinguish between A and B setups while you are trading, so that you don't use the same risks while you are trading all setups, right? There are times where you should use 1%, there are times where you should use 2%, like what I usually do. So you need to have that capability. Now let's look at Great British Pounds US dollar. Now if you look at the daily, in GPU, we have price has really been moving. Okay, so we have price actually in an uptrend as well. You see, we usually have almost the same thing that happens in between Euro, US dollar, and GPU, because they are correlating. Say there are two currency pairs that correlate. Now if you look at it very well, you see that we have price break out of a key zone, right? Price actually broke out of a key zone here, and price, we see this long bullish candle. Like I said earlier, if you see this long bullish candle, just expect a very strong uptrending market in a smaller time frame. So basically what we do here is we just zoom out very well so that we should identify our peaks and our key zones, right? These are key zones that we identify here, and then since price comes down and then broke through, we have a possibility now that price can be heading right up to this zone. That's already a very good sign for us to be looking for our buys, right? Without any contradictions like the ones we saw in Euro US dollar. We have no contradiction as well in the one we saw on gold. We have a strong uptrending market, price breaks through the zone. Now what we want to be waiting for is in a smaller time frame. You might want to use maybe a trend line, whatever you want to use, right? You can still connect like that and then wait for price to pull back to your trend line, because we already have an information of the strong trending nature of the market, and we know that we are going to be getting pullbacks and we are going to be looking for longs, right? It's not sufficient to know that the trend is up. It's also sufficient to know when to enter, right? So here you can identify our demand zones, right? After doing our multiple analysis, and then we are waiting for price to tap to these zones for us to be entry. We identify our key demand zones, right? And then we wait for price to tap, other blocks tap, and then we enter. And then we can also use, like I said, our trend lines, and then we are looking for price to come. Sometimes it consolidates, comes and taps, right? In a smaller time frame, I'm also going to be looking further, for zones. But sometimes it's really nice if you identify these other block zones, these demand zones. When price will be tapping, we are entering, tapping, and then we are looking for buys. So it's very simple, guys. If you want to make your analysis, just make sure that you keep it very simple, very, very simple, and it's actually going to help you out. So that is it, guys. I hope you found the video helpful. Remember, you can use this strategy in any market. All right, so if you found it helpful, make sure you subscribe to the channel. Give me a thumbs up by hitting on the thumbs up button, on the like button, so that other people can also see the video, right? And also make sure that if you are coming across this channel for the first time, just make sure you subscribe to the channel by hitting on the subscribe button and notification bell so that you don't miss out. And if you want to trade with me one-on-one, remember, you just need to sign up through the XNET Booker link that I'm going to drop in the description below, and see you in the next video.